Welcome back to the channel, everyone. Today I want to talk about the recent AMC glitches and how they're actually a massive cover-up. I want to talk about what's been going on and what I think they're actually trying to cover up. And I also want to show you some examples of some of the most blatant naked short selling and synthetic share creation that I've ever seen. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, an experienced software developing ape thinks there's no such thing as computer glitches in modern computers. He says a computer glitch is a myth which doesn't really exist in modern computers. Either it's bad programming, or when a program meets a new condition that's not defined in its logic, it's called a bug and it's fixed with a patch. He says software developers and help desk people call it a glitch so they don't have to explain it to regular, everyday people that don't really understand IT, probably like you and I. And he says I'll try and explain what his thoughts are. So he starts by saying all of the brokers pull the short interest data from one or multiple sources, whether it's coming directly from the New York Stock Exchange or the Nasdaq, or whether it's coming from each individual prime broker and the trades that they've processed. He said somebody at a high level probably asked the developers that are pulling the data to hide AMC's data only, or to only show a half or a quarter or a tenth of the real short interest in its simple SQL query and calculation before you can present the data. Now what I think is that as it was totally illegal, there was no legal change record for it. Probably a financial head asked a small team to implement the change or to implement the cover-up. Now in the next change request or daily update, maybe there was a different team or the same team but a different employee and they accidentally overwrote that part of the program. Maybe beforehand they were showing 1/10 of the true short interest and now for some reason they're only showing 1/5 of the true short interest. Maybe that's what they were doing a few months ago. Basically a new team or a new employee updated the data and accidentally overwrote the previous SQL query and got their wires crossed and basically presented the wrong cover-up. Maybe they were only trying to present 1/10 of the data and now they were actually showing 1/5 of the data, therefore causing that drastic increase from around 18 to 20% to around 40%. And he says this might be the reason we saw so many cool glitches with AMC in 2021. Basically different employees and different teams getting their wires crossed and not knowing exactly what data they should be presenting. Obviously, if you're telling the truth, the data is very easy to present because there's only one set of data, which is the real data. But if you're trying to cover up a lie with a different set of data, people can get confused what set of data they're actually supposed to be showing. Should they be showing 1/10 of the short interest, 1/5 of the short interest, a half, a quarter, a 20th? It can very easily get confused and wires can get crossed. And he says this time the apes noticed and made such a huge noise that they were afraid that if they corrected the data, then it may lead to an investigation or a court case and open a giant can of worms, and some big guys may go to jail if exposed. And that's why TD Ameritrade added the specific date the 15th of December 2021 and then changed the data to show the data from the 30th of November. Therefore, they can easily cover up the data by showing the data from a different day without saying that they've corrected the data, they're just presenting different data. He says if it was a general bad programming bug, then you'd see double the short interest for all companies, not just for AMC. The fact that it's been designed specifically for AMC means it's a simple SQL query, obviously directly for AMC, and not for the entire computer program. You may have noticed that Fintel went on a massive rant recently saying the short interest data of 40% showing on Fintel was a photoshopped fake. That was obviously quickly dispelled as many people started posting videos of their Fintel website showing that 40.34 short interest percent. And obviously that 40.34 shown at Fintel is different from the 40.25 or the 40.24 shown on TD Ameritrade. Fintel went on this massive rant and exposed that naked shorts do exist and naked shorts are counted in the official exchange reported short interest. Now I don't actually think that naked shorts are included in that official exchange reported short interest because obviously the data is self-reported and these funds and institutions just won't report their synthetic shares. But it's interesting that Fintel did confirm the existence of synthetic shorts and naked shares, or naked shorts and synthetic shares. Right now, you can currently get up to $250 in free Bitcoin when you sign up to BlockFi using my link in the description below and make your first deposit. When you invest through BlockFi, not only can you just buy some Bitcoin, leave it in a wallet and forget about it, but you can also earn interest on your deposits up to 9% per year, also paid in Bitcoin or whatever other cryptocurrency you're holding. On top of this, BlockFi also offer a rewards credit card with an introductory rate of 3.5% cashback, also paid in crypto, on your purchases. That way you can accumulate more and more and more Bitcoin while benefiting from the rises in pricing. And when you've generated a massive profit on your investment, instead of having to sell off your Bitcoin and potentially missing out on the next run up and recognizing all of those gains for tax purposes, you can take out a crypto-backed loan with BlockFi. That way you can get cash to meet your day-to-day expenditure without having to sell your crypto. Now I also want to talk through some of the most blatant examples of synthetic shares and naked shorting that I've ever seen. Here we have Insignia Systems, ticker symbol ISIG, on Yahoo Finance. If I scroll down to the float, we can see that this stock has a float of 916,000 shares. It does have 1.77 million shares outstanding, but I think we also have to take into consideration the number of shares held by insiders, the number of shares held by institutions, and the giant short interest this stock has. So this stock has a float of around 1 million shares and a short interest of around 50%. So that means that half of this float is being lent out and sold to other investors, and therefore there's around 1.5 million shares between the float and the short interest. Now of this float, 40% of this stock is being held by insiders or by employees at ISIG. So that's around 400,000 shares being held by insiders. So of the total 1.5 million, there's around 400,000 shares held by insiders. So around 1.1 million shares free to trade or available to trade. Now on top of this 1 million shares, around 22% of it is held by institutions. Now these institutions are likely just holding the stock and not day trading the stock, so that's another 200,000 shares that isn't really available to trade, meaning there's 1.1 million less an extra 200,000, so only around 900,000 shares available to trade at any one time. Now if we head on over to Webull just to look at the volume, we can see here in the top right corner that I have ticker symbol ISIG Insignia Systems here again. Now on the top left hand corner we can see that ISIG opened at $30, had a high of 32, a low of 23 and a close of 23.75. But yesterday we had trading volume of 23.67 million shares. So there's a float of 900,000 shares. Yes, some of those shares have been shorted and sold on, but some are held by institutions and insiders, meaning there's only around 800,000 shares to trade, but yesterday we clocked in volume of 23 million shares. So that's around 30 times the float being traded in a single day. The day before we had a trading volume of 28 million shares, the day before that 43 million shares, but in the days prior to that we saw fairly reasonable trading volume, just maybe 1 or 2 times the float. That's incredible that on a day with 43 million shares of volume, that's about 6 times the float or 60 times the float being traded in a single day. AMC has traded about 50 to 60 times the float in the course of the year, but ISIG traded 60 times the float in a single day. Now that goes to show that naked shorting doesn't just happen on OTC stocks, it also happens with stocks listed directly on the Nasdaq or on the New York Stock Exchange as well. If I go to the weekly chart, we can see that at one point ISIG traded for around $40 a share, but was then very quickly pushed down all the way to $8 a share and ultimately down to around $4 a share. Clearly this is tons and tons of naked shorting and synthetic shares that were created in order to push the stock down this heavily in a fairly short space of time. Now I also wanted to talk through this example as well and show you the video. It says in March of 2005, this guy bought 100% of the shares or 1.1 million shares in a traded company to prove the corruption. In the next 2 days, that same stock traded 50 million times, even though there was 0% shares left, as he bought 100% of the float, and the hedgies dropped the price 99% in only 2 hours. And all of this happened with literally no shares available to borrow or no shares available to short. Now I think there is a minor correction in here as well, and it says another key difference is that Robert Simpson's shares were not direct registered, they were just held in his brokerage account or in his trading account. And that means the shares remained in the street name, and as such they could have been lent out, although they shouldn't have been lent out. Either way, there was only 1.1 million shares in existence, and those 1.1 million shares still traded hands 50 million times in a 2-hour period. But let's also watch the video and hear what they had to say.
In March 2005, the Senate Banking Committee confronted then SEC Chairman William Donaldson with a story about Frank DeBrookie's company, the Nevada-based real estate holding company Global Links. An investor named Robert Simpson had set out to prove that small companies were indeed frequent targets of abusive naked short sellers. Simpson placed an order for $5,000 worth of stock in Global Links. That got Simpson ownership of all 1.1 million Global Link shares in the market. Not some of them, all of them.
There were no shares available to be borrowed, and yet in 2 days there were over 50 million shares traded. That's clearly something that needs work.
I was absolutely blown away when I bought 1,282,050 shares, which equated to 111% of the issued and outstanding. I just couldn't even fathom that. So it wasn't just crooked, it was Wild West times 10.
So that really just goes to show just how rampant naked shorting is, not just in OTC stocks, but in stocks listed on the Nasdaq as well. And I also want to talk about just how blatant the manipulation is in AMC stock and how Nathan's got it all figured out. He says, check this out. I've followed the AMC price since the middle of December. Look at the number, watch the stock, and prove me wrong. He says, I did this from my phone. Imagine what you could do, the Justice Department, the SEC and Gary Gensler, if you actually did something. So if you look at the level 2 data, when you see the number of shares sold ending with the following numbers, below is the price you're going to see along with it. When they want the price to drop, they increase the number of shares sold or bought by 1 share. So as you can see, depending on the number of shares being sold, it indicates a different price point that the institutions want to drop or raise the price of AMC to. So as an example, if we pick 79 here, if there's 79 shares being sold or bought in a rapid succession, the price of AMC should be driven somewhere to 25.01 to 25.35 per share. Now I know that Lou regularly posts the level 2 data for AMC, and here you can see a number of instances where 79 shares are being bought and sold in rapid succession. If we look at all of these buy and sell orders, there's somewhere between 25.16 all the way up to 25.21 on the buy side, and 25.25 down to 25.28 on the sell side. Now obviously if we go and reference our 79, that is exactly where the price of AMC should be per Nathan's workings or Nathan's research. Now if we take another example from Lou here, we can see a number of instances where 71 shares are being bought and sold in quick succession. It seems to range from 27.87 up to 27.90 on the buy side and 27.95 up to around 28.01 on the sell side. Now looking at 71 on our reference, again 2018-18 down to 27.79, so exactly in line with the number of shares that are being bought and sold. So at the moment the hedgies have complete control over AMC and are manipulating it between $24 and $30 per share to try and encourage people to pay per hand and sell their shares. But obviously when AMC runs through the $30, $35, $40 regions, the hedgies are going to lose control over AMC and won't as easily be able to manipulate the price. Right now the hedgies can do whatever they like in this region, but it's not until there's some kind of catalyst or something that pushes the price of AMC up over $30, $35 and $40 that the hedgies will start losing control. As always guys, be sure to let me know down in the comments below what you think about the glitches in AMC being a massive cover-up. And if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!